What's going on, everybody? It is September 17th, 2022. This is going to be a weekend review over the week and kind of what happened, semi-daily log as well. So, touching on yesterday's price action, Friday. So, Thursday, I left you guys with some information to potentially look at Friday for a setup. Yesterday wasn't the cleanest moves. I'll touch on a PM session setup that you most definitely could have taken advantage of, and then talked about why I believed price was going to retrace back into the weekly range. First off, I really wanted to go over just kind of the whole week on the daily chart, why I predicted price to go exactly where I wanted it to. This is not me being egotistical or, overconfident. It's just me stating the facts. I believe there's a lot of things, especially on Twitter, a lot of these gurus, these people out there post just not even charts, it's just PDFs and stuff like that. And it lures people in to believe that these people understand these concepts very well, and they end up selling a course, and then they make money off of it, and people end up getting scammed. And I've been scammed as well. And it's the reason why I honestly do these daily logs is because you don't need to pay anybody to learn this information. ICT has all the information you ever need on YouTube. And B, there's plenty of other people who give out this information for free. You don't have to pay these people on Twitter for their Discord or Signal groups or anything like that. You could become your own signal provider for yourself. If you understand these markets, you understand how to trade them, I promise you life will be a lot easier, a lot better. So what I'm asking is if you guys can, tag me on Twitter. If there's any of these daily logs have helped you in any sort of way, I'd really appreciate it if you could tag me on Twitter. I'll definitely retweet it, like it, give you guys a follow back. That way people just understand that this is out there, because I don't think I have a huge following to where people can see this, and I really think a lot of people need the help. But with that being said, let's look over this week. And I believe starting on the weekend review on the Zoom call, I stated this low here. I'm going to take all the annotations off. And I said this very clearly a couple times. 38.83 or 38.82, I believe, is what I was aiming towards. 38.82, probably 0.5 is what I said, which was what? The last week low. Okay, so going into the week, I was explaining to you guys the easy model I kind of look for in a weekly time frame. I'm always looking at, okay, where do we open? Can we target the previous week high or the previous week low? And that gives you a nice framework to work off of. So looking at the weekly time frame, I was stating that we should be looking at the fair value gap here, and then the bearish order block as well that I annotated. Okay, so this bearish order block, the last up close candle, coupled with the fair value gap, which makes it an order block. We tagged a little bit above equilibrium here. The body stayed just beneath the opening of the fair value gap there. We took out the previous week high, and then we sank lower to take out the previous week low. So that's the reason why I was stating that we should be looking for 38.82 or 85. I forgot what I said, but that's what we should be looking for, because that's a draw on liquidity, right? Especially if we're looking for bearish prices and we're inside of a premium, we should start looking for those lower sell side liquidity pools. So we dug up into a premium. We ejected off that order block here, right? CPI came out. I didn't catch that. I don't think a lot of people did, and that's perfectly okay. Okay, that's part of trading. Sometimes you're going to miss trades. You're not going to be able to catch the full move. It doesn't mean you're a bad trader. It doesn't mean the model failed. It just simply means that you have to sit out that day and watch price, and that's okay. Looking at, I believe this is Wednesday, Thursday, and then Friday. Wednesday was super sloppy, and same with Thursday. Friday was the AM session was very choppy. It was not something that I would have liked to be inside of. But I explained to you guys on Thursday's video that we should be looking for PO3. So we should be looking for a TGI Friday trade, which means going back into the weekly range, retracing back into that weekly range. So if you look at the weekly time frame candle, we opened here. We made the high of the week. When we sank lower, took out the sell side liquidity pool, resting here. And then right before on Friday, we retrace back into that weekly range. So it gives you a framework on a Friday if you know you've met some objectives for yourself that you should maybe looking for a retracement back in. And especially with this gap here from the opening, that was a huge draw on liquidity to me. We're sitting inside of this order block here. All those things are huge alignments on a higher time frame for me to be like, okay, I can start looking for possible retracements. Looking at a 4-hour chart, I stated this fair value gap here. We sank beneath it. There's one right here. I don't foresee price continuing higher. I believe we'll fill in this gap, maybe bounce around, and we'll end up taking out the sell side liquidity personally. Looking at it, we drew right back into that opening gap right as the day closed. Not a coincidence. Looking at the 1-hour chart, there's not a whole ton of information here on the 1 hour, but you definitely could have annotated the opening gap resting here. So that was your drawn liquidity overall for yesterday. So you could have been targeting that. You could have been targeting the buy side liquidity resting above here. Jumping down to, let's look at a 5-minute. The 5-minute, so if we look at, this is the opening for me. So midnight, New York local time. Price coming into New York session, I'm looking at it knowing, okay, I'm bullish on the day. So I'm looking for price to set the low of the day first. I want the low of the day set first, and then I can start looking for my model to form. There was actually a couple setups in the AM session, I believe, that you definitely could have went long on. There's a nice little fair value gap here. So the context is we took out sell side liquidity. We displaced higher. We have a market structure shift. And then we come back into that fair value gap here. You're targeting the buy side liquidity resting here. And overall, you would be targeting probably the buy side resting above here. There's some buy side here that we eventually tagged. And that's why taking partials is super crucial, especially in markets like this one. It's choppy, range bound. Just get your pound of flesh and get out of the market. There's no reason to have an ego and try to really wrestle with these markets. It's just going to get you hurt in the long run. Looking at a 2-minute time frame, after we expanded higher, we came back into this order block coupled with the fair value gap right next to it. So this is your fair value gap here. We came right into the mean threshold of that order block here. So that could have been either a entry or a second entry for you if you want to pyramid, and then you'd be targeting the buy side liquidity resting here. And then eventually, above here, here, and then here. And that way, you're taking partials here as soon as we displace above that high. For me personally, depending on my entry, if it was somewhere in the fair value gap here, we're already up almost 17 points at that point there. So I'm already moving my stops to break even personally. That's enough for me to take the risk off the table, take some partials. Right around here is about 1%. You could take a partial there. And then price ended up drawing lower. Coming into the PM session, we took out the sell side liquidity again. Now, this is where I get caught up sometimes in the earlier stages of my development, is after we took out the sell side liquidity, you do see a displacement higher, right? But there's no market structure shift. For me personally, I need a shift above this high. I'm not just saying that because price did. Actually, if I was really looking at it coming into it, this would be the high I'd be looking for. But let's say price was here. There's no market structure shift. That's not even a really nice displacement. Price was very lethargic. That's inside of lunch hour. There's no trades for me. So if you speed price up, you're looking for that displacement higher. So no displacement or market structure shift above here. And then you see price right around lunch displace above this high here. So okay, now I'm looking for a fair value gap that comes into a discount. Okay, so price displaces into that fair value gap. And I really like the YouTube model when the 5-minute, 4, 3, 2, and 1 all have the same area fair value gap. So if you look at a 5-minute, your fair value gap is here. If you look at a 4-minute, your fair value gap is still there. 3-minute fair value gap is there. 2-minute fair value gap is from this low here to the high here. There's a second fair value gap here, so your stop loss will be underneath there. And then the 1-minute as well. So that to me is a really good criteria. Looking at the 1-minute, I've talked about this in my earlier daily logs, especially this works on any time frame, but on a 1-minute, you're looking for the sell stops to be ran out before displacing higher. So in a bullish environment, you're looking for lows to be taken out before going higher. In a bearish environment, you're looking for highs to be taken out before going lower. Okay, does that make sense? It's super simple, especially on a 1-minute time frame. You're not going to see this on a 5-minute because all you see is the fair value gap getting tagged. But if you look at the 1-minute, that's really, really good criteria for me, and especially watching price. And even if you entered in here, that's okay. You can still keep your stop loss where you originally had it, let's say here, and beneath the fair value gap here. I mean, you're only risking 7 points. If you really wanted to do it, you could do almost 10 points, 1% risk. And then you're targeting the opening gap that I mentioned earlier. So that was really nice to see price tag the fair value gap here. Looking at, I believe there's a couple more, maybe one more setup, I believe. So looking at this here, do you see how there's no, I mean, there's a fair value gap here that we traded into. Looking at a 4-minute, it's not the cleanest fair value gap. 3-minute, it's okay. 2, nothing there, and 1, nothing there. So to me, it's not the best. I believe not even the 15 or the 30 really had anything. So I personally wouldn't have really entered here. The thing that we really rejected off of was the order block, which is these last 2 down close candles here. If you go on a lower time frame, I'm sure it'll be a little bit more clear. And we dipped into a discount relative from the swing low to the swing high here. So we dipped into that discount, the fair value gap resting right there. The body's closed above it. It's a good sign. Came into the order block, and then we eventually displaced higher above this high here, and we came right into that opening gap by the end of the close of the day here. So that was really, really nice to see. Personally, the best opportunity for me would have been here. I probably would have been out before the opening gap was even touched. Like I said, I'm very short-term trader. I like 2, 3R, so 20 points or 30 points, depending on my risk. And that's all you need out of the market. Because if you try to keep pushing these things, in my earlier development, I was really always trying to look for, 40 points, 50 points a trade and holding on. And I would never take partials. I would never move my stop loss to break even at the right point. Price would always come back and hit me at break even. And I'd always be so angry at myself. And that just really has to do with greed, which greed is not a bad thing. I think I've mentioned this before. I highly recommend you guys getting the book, The Mental Game of Trading by Jared Tindler. It's helped my psychology tremendously, especially with tilt. That's something that I really had to overcome. You know what's funny with tilting? If you lose a trade, especially if you guys are going through these prop firm challenges, it's not the loss that is affecting you. It's not the money on the screen that's affecting you. It's all the things that a trade represents for you. So for an example, when you lose a trade, you're basically putting on the line all of these fears and doubts and things in your life. So for an example, what do your friends think of you doing this? Your family members. So every single time you lose a trade, especially for me, from my personal experience, I'd get so angry at myself because I thought I was just losing the trade, and that's the reason why I thought that. But in reality, it was because of, I didn't want my friends to see me as a failure, my family see me as a failure. Um, you know, Social media. There's so many different layers to a trade when you lose that. It's not just the money on the screen. It's not the P&L. It has to do with a lot of underlying beliefs and false biases. And once you can start to unravel that and look at it objectively and say, okay, a trade is just, it has so many different variables to it. But once you understand that the market in your system, there's so many different variables that come into play here. But the whole thing I focused on is knowing that my system and me, I produce a certain amount of outcome over a period of time. So when I lose that one trade, I note down that's just one trade out of, let's say, 100 or 1,000 trades. Because when you get solely hyper focused on one trade, that's when you start to tilt. That's when you start to, um, FOMO and revenge trade and do all these different things because you're focused on that one trade. You think that one trade is going to make or break your entire career. When in reality, that's not true at all. You have thousands, if not millions of trades in your career. That one trade is not going to affect it. So that's just my little rant. I appreciate you guys so much. Like I said, make sure to definitely tag me on Twitter if any of this has helped you. I'll get back to you guys possibly tomorrow, depending on the opening. And yeah, that's it. Good luck and good trading, my guys.